So hi guys, in this video I'm going to teach you about chart patterns. So this is one of the technical analysis videos. So the chart pattern is head and shoulders pattern. So before going into the video, I'm personally teaching trading, and if you want to join my mentorship course, you can call me by the number in the video scrolling below. So my syllabus would be worth it. So I will teach you so you can make consistent profits. Definitely. So I will teach you like that. And I'm also providing discounts for the first 25 members. So if you are willing to join, you can call my number or a message to my number. So now let's go into the video. So what is head and shoulders? So head and shoulders, there are two patterns. So head and shoulder and inverted head and shoulders pattern. So this head and shoulder pattern shows you that the trend is going to reverse from uptrend to downtrend. That is bearish reversal. The inverted head and shoulders is the trend is going to convert from bearish to bullish. That is bullish reversal. So downtrend from downtrend to uptrend is going to go. So once the here after it breaks the this line we take entry, and here after this breaks this line we take entry. So I'll show you. There are three types. So the first type is straight, and second is upward slope, and third is downward slope. So this is the left shoulder, and the stock price takes a support here, and this is the down shoulder. Sorry, this is the head, and this is again it takes support here, and again it takes support here. If you do not know what is support or resistance, you can watch my support and resistance video. So it takes the support here, and this is left, and this is head and right shoulder. Usually the left and right shoulder would be small and the head would be high. It is like a human body. Sometimes the left and right shoulder might not be the equal in length, but mostly if it's equal in length, it is highly reliable. So so we plot a straight line, simply like we plot a straight line, and this is known as the neckline. Once the stock price, once the right shoulder breaks this neckline, that is for a valid breakout, there are three rules. The first rule for a valid breakout is that the candle's body should close. If the wick of the candle alone closes, it's not a breakout. And the second thing is that there should be a high momentum candle. That is a candle with a big real body. And the third rule is that even if the volume also increases on the downside, then there is a higher chances of the breakdown. So this is the case. So how the once it breaks, you can take your entry, and the target is usually you have to take the length from the right shoulder to the neckline. So you can keep it as your first target. That is this length. You can keep it as your first target, and your second target you can keep it from the neckline to the head. You can keep it. This is your second target. So you have to you can for the tool you can in trading view you can see this is the head and shoulders. So you can draw like this. So this is the head and shoulder, and for price range you can select this. So if suppose if you are measuring the length of this, you can keep the length here. So stop loss should be placed above this right shoulder or at the high. A candle would be here, no? So that's candle's high or a little bit above the high. You can keep the as the stop loss. So this is the first model. Second thing is there is a slope. Sometimes the head and shoulders also occur like this. So that time, same procedure. You have to measure the length from the right shoulder to the neckline, from the head to the neckline. This is your first and second. But you have to place the target where the stock price breaks. You cannot keep your target from here or from here. You can't keep that. Once the stock price break, you can keep it from here. Target one, target two. So if the you can exit partially from target one. Suppose if you are buying 100 quantities of stock, you can take 50 rupees, 50 stocks out profit, and you can let the remaining 50 stocks run till it reaches the target two, or you can hold all the 100 quantities, and you can once the target reaches around this place, you can move your stop loss up to this point. Once then if the target 2 is reached, you can exit altogether. Or even if the stock price comes down, you get exited from the partial profit. That is your 100 quantities into the number of rupees you have gained. So this is how you have to keep your take your profits. So the third type is this downward slope. So the first type and second type usually it's safer. The third type is not safe since it's already down. The target might not reach properly. For example, if you are making a target from the head to neckline, you might not get the target fully reached. Instead, you can take this little target that is from the right shoulder um, to the neckline. You can keep this target alone as your main targets and avoid this target too. Or you can do what you know. Uh, some people will not will draw a little line, a straight line from this low, and they take the entry here. Once the stock price breaks this point self, they will take the entry and keep the stop loss accordingly from this point. Target one, target two. They would keep like this. So this is another way of entry. So, and another alternative way of suppose if the right shoulder and left shoulder is low, is of less length, like this much only, the length is very low. So you can tape your targets like this. For example, if the head is so big and the left and right shoulder is also so big, the stock price usually comes from the some point. Take this point. Suppose if the stock price comes from this point, some people would keep the targets as till this point. So this is also an alternative way of placing targets. This can be used if the length is so high. So if the head's length is so high, you can keep like this. So this is another alternative way. So similarly for inverted head and shoulders, it would be like this. So this is inverted head and shoulders. It's if you keep the head and shoulders inverted, it is known as inverted head and shoulders. This is for bullish entry. So you can keep like this. So this is how you take entry based upon inverted head and shoulders pattern. So this is this is head and shoulders and this is inverted head and shoulders. It's the same concept. So usually the this is a basic structure. The market would be like this. So it would not be exactly forming like this, but this is a general thing. So I will show you a real time example in a live chart. So this is the Axis Bank weekly chart. So this is during the Corona time. Nearly, you should take how you should take. Let me place it. So you should take the head and shoulders here, and you have to take any swing. See, the stock price is forming almost supports here like this. So you have to take any swing low. So this swing low, you are taking it. We can easily spot once you are more experienced. So this is the head and this is the right shoulder, and you can see the stock price breaks this. So this is known as the neckline. So this line is known as the neckline. So this is the neckline. So once this stock price breaks here, so this neckline is broken here. You can see the candle is so big. The candle has the candle's body is closed. Also the candle is a high momentum candle, and also the volume is also high here. So you can see this is a definitely high valid reliable breakout. So you can take your entry here. So you can take your entry here, and you can put your stop loss above this right shoulder or at the high, the maximum swing high of this right shoulder you can keep, and your targets accordingly. You can keep the length. You can for the length you can take the price range. So this is your first target. So you can press the control key and drag it. So it copies. So this is your first target, and your second target would be you can measure the length from the head to the neckline. So this is your second target. So you can keep it here. So this is your second target. So this is your first target where you can exit partially, or you can move your stop loss, or you can keep trailing stop loss, and then you can wait for your second target to get reached. So in case of you can see the inverted head and shoulders, it would be like this. So inverted. So it would be like this. So this is the difference between. So this is the second type. You can see this is clearly the upward slope. So this is upward slope in case of head and shoulders, but in case of inverted head and shoulders, the upward slope is not upward; it's downward slope. If the upward slope, if the downward slope is there in head and shoulders, means it's actually upward. It's opposite. So that's it. And I will bring some other examples of you can see here the you can take the first length. You can see this length target, the first target has achieved, but the second target didn't achieve. It took really retrace and then only it achieved. So the first target has reached here. You can see we can copy paste it. The first target has reached, and if you see the second target, you measure it. It took almost no, it did not reach. So the stock price did not reach. So sometimes the first target, taking the right shoulder to the neckline is safer for you guys instead of taking the. If the head is so big, you can use the first target alone. But if the head is small, such as this much, and the left and right shoulder is small, you can take the head to neckline based targets. So this is one way of target. And another way of targets is you can keep just the stock price comes from here. So you can also keep the target as this low also you can take. So this is an alternative way of keeping the targets. So that is this way. It is an alternative way of keeping your targets. So if the head is so long, so another way, and you can see this is inverted head and shoulders pattern. This is Adani Power. So it took. You can also take it as a trend line, and once the trend line is broken, it again retest. It forms a retrace, and you can also use Fibonacci retracement. It's around 61.8% retrace. You can also keep targets based upon Fibonacci. So once the first targets, that is the head to neckline, even the head is small. So you can take the head to neckline. The first target is reached. You can also keep copy and paste, and again you can keep it as second target, and again you can copy and keep it as your third target. But you can move your trailing stop loss, or you can exit partially. You can do like this, or alternative way. So you can also keep this high as your target. So this is alternative way of keeping your targets, or you can use Fibonacci retracement. So this is an inverted head and shoulders pattern. So this is the monthly chart of Adani Power. You can also refer to the fundamentals and news, and use other strategies such as supply demand zones, market structure. You must definitely see the structure before structure, supply and demand zones. You should see these stuffs before seeing any other chart patterns, including this head and shoulders pattern. And you can see here this is a super house. So you can see the first target, that is the right shoulder to neckline target is achieved, but the head to a neckline target is not achieved. So stock price it went till here and then came down due to some factors. It may be a bad news, or some Nifty might be falling. The market, overall market would have fallen. Something would have happened at this point. So that's why the market went down. Otherwise, would have even reached this target. So this 56.15 points it would have reached. You can also take. You can also see whether the head and shoulder is forming here. You can also compare and see. So you can see it almost again forms a head and shoulder. So you can keep your targets from the head to this length, and you can keep it accordingly. So this is how the head and shoulders is drawn. Sometimes it may also fail. You can see here it has failed. So at this point, again in Axis Bank, you can see, um, this pattern has actually failed. So if you, since that candle also is not that much big, the candle is didn't the candle's body gets closed here, but still it's not a high momentum candle, and the volume is also not that much. So you should be careful. So the traders would have taken entry here, would have lost their money. So since the head is also high here, you can avoid. So the head and shoulders might also become failures. You have to look at other factors too, and compare it, and take your entry. So this is this video, guys. So hope you enjoyed this video. You would have got a better clarification of what head and shoulders means. So this is what head and shoulders is. So I will also bring other pattern videos or any other fundamental or psychology videos. So if you like my channel, like, share, and subscribe, and also press the bell icon so you get notified for all my videos, and all button also you press it, and also comment if you really like the video. So your comments would motivate me. And if you want to join my trading mentorship course, I'll be teaching basic and also advanced concepts. So if you are willing, you can join. I'm also providing discounts for the first 25 members. So if you're interested, call or message to my number on the scrolling on my video. And also, if you want to open a Demat account, you can. I've given you Zerodha link on all my YouTube videos description. You can visit and start trading by opening a Demat account online. So, hope you guys enjoyed this video. I'll visit you on my next video. Until then, bye bye. Take care.